Hey Bulls, how we doing? It's Chase. It's the Stock Sherpa. It's the Market Maven. It's the sore throat Sherpa today. It is this is the Sunday game plan on the 21st of November. Tomorrow's the 22nd. That's Monday. Y'all know the Sunday game plan is going to be short and sweet and abbreviated for this week, just like the market is. So remember, Bulls, the market trades closed. The market is going to be closed on Thursday, Thanksgiving, and then it's a shortened 1 p.m. Eastern time close on 2 p.m. Eastern time, 1 p.m. Central for Friday. So remember that these are typically going to be indicative of low volumes, retail stocks leading the way, and essentially there's not a lot doing. Everybody's out having turkey and getting that tryptophan going on. But truly, I've got the stocks for you this week. Genuinely believe most convicted trade of the year, just like Edit was, just like we cashed was. And you'll probably already know what it is, but let's get to this shit. We're going to keep this a bit abbreviated because this week is going to kind of tell itself. To tell us what's happening as it goes. So it's going to write the story as we move. Let's go to everbullish.com, shall we? For my substackers who are getting this on time, welcome again. Thank you for your patronage again. You will always be the reason I make these videos. All right, guys. I apologize for any sniffling you may hear. It's the strep throat Sherpa today, the sore throat Sherpa today. Check out my portfolios. More on that later. If you get the chance, go check out the performance of the Ever Bullish All Stock portfolio. Again, I don't want to toot my own horn too much, but we're going to do that a bit later. So here we are. Thanksgiving coming up. I hope you all have a great one. What's in the news right now? I was surprised to see that in the weekend edition of the Journal, we didn't have anything about the Kyle Rittenhouse and the guns. I'm apolitical on this channel. I'm apolitical in life. I can't deal with any of that shit. I only have enough brain cells to watch the stock market, and that's about it. But we do have a little bit of information about the inquiry into gas prices. They're always fixed. They'll always be fixed, particularly natural gas prices. Ever since the Aubrey McClendon days, great book called The Frackers. Go read it about that. But, you know, big deal. We already know that this is fixed. Crypto Group faces real snags in the bid for the Constitution. That's the, I forget the guy's name, the billionaire crypto investor that tried to get the, actually ended up getting, right? No. Yeah. Ended up getting the Constitution. And then we have a little bit over here. But look what's not here. Tesla, Toyota require EV tax credit. Big deal. Big whoop. Again, you can tell there's not a lot in the news, but there's a lot that's apolitical in the Journal as well. And I think they're catching on. They took way too much of a liberal stance, in my opinion, over the last couple of years, and they kind of fucked their market. All right, so here's what Market Watch has to say. We've got the look here. You know, what does history say about the performance of Thanksgiving week? That's important. Inflation is high. Interest rates are very low. You'll need income. Here's an alternative that yields 7% or more. I know a guy that builds portfolios that do that, and they made 19% this year. Go buy one. Ever Bullish dividend portfolio. Powell and Biden rolled the dice over inflation growth. Yeah, no shit. Citadel's Ken Griffin just spent $43 million in a Schadenfreude, whatever that is, to get a copy of the Constitution. All right, so whatever. All right, so here's some facts on the week, and one more thing I want to show you here in a sec. Facts on the week. We all know we touched this on before. So the Thursday, November 26th, is the Thanksgiving holiday close. So all markets are closed. There's the abbreviated trading schedule on Friday after Thanksgiving. The bond market is open regular hours. The stock market closes early. Yeah, it is 1 p.m. Eastern, so it's noon my time. And, you know, there it is, the bond market. All those bond guys are fucking weirdos. Y'all all know that. That's why they just can't seem to follow with the main crowd here. But this is kind of cool. So since 1945, since we started keeping tabs really on – the market goes all the way back to 1860. But at that point, I mean, is it really a market at that time? We were hardly a country. We're a country, but we weren't necessarily developing and industrializing. It was at the end of the Industrial Revolution that we came up with the Dow back in the 1800s, and the Dow is only 30 stocks, and they don't really track industrials anyway. But I've talked about that ad nauseum. You guys are tired of it. So since 1945, the Monday ahead of time has been flat. The Tuesday afterwards has been flat. The Wednesday has been barely up. The Friday has been flat. The whole week has been up. We had a massive sell-off last week. Energy took all the breath out of the market, and then the hangover from earnings on technology happened. I wish I could have seen the energy. That was my worst trade of the year. Last week was my worst week of the year, all year trading. And remember, I've only got less than a dozen down weeks, but last week was one of them. So I'm ready to climb back, and I know what we're going to do it. But here's the neat thing: this baby blue color, my favorite color. We have 0.5% on Monday. So I expect Monday to do well and follow this theme. When you add the sell-off on top of it, when you add the retail numbers that are going to just go bonkers with all the money that's been infused into the market and all the higher prices that are required in the market to keep the inflation at bay, basically, that's where we are. So the main essence of this is that, yeah, we seem to move a little bit more than the average norm, which makes sense. Especially, remember, none of this stuff takes into account that retail traders are trading. All of this shit goes back to when you had to call a broker, pay a couple grand just to buy one share. So those days are over. That's why I don't pay too much attention to those. And then what's the Sherpa doing, guys? I got rid of all but one ERX, and that's basically because it was down out the ass. I have quite a bit in this one hut that I have here. I'm confident that that's going to cash. It climbed back huge. I have LABU 60, LABU 55, LABU 58, LABU 52, and LABU at 50. If I tell you to buy it, it's because I've already bought it. Not already bought it necessarily. I'm not front running, obviously. It's because I believe in buying it. So real simple, guys. Sometimes you just got to go with what you know. Sometimes you dance with you who brung you. But most importantly, when the NASDAQ is only 4 points off the all-time high, and the biotech sector is nearly at an all-time low, there is a disparity in correlation. I'm going to exploit it. Step on their fucking neck. LABU. For the dividend conscious, don't forget about that 6.1% dividend yield, which is going to be higher now that the market sold off a bit in UMI. So UMI Midstream Energy Fund, this thing is the bomb. I like it. Don't forget who told you about that. And by the way, you just solved all your problems by watching my videos. Crypto, baby. I told you it was going to happen over the weekend. Bitcoin was at 55 when I made the announcement on Thursday of the Sherpas list. I told you it was going to rally. It rallied to 60 over the weekend. Ethereum bounced down from an all-time high, but we know Ethereum is bay all day. And then Bitcoin Cash is one of the altcoins that I like. And then also Solana, remember to go buy that. But straight up, we had bullish reversals in Hut, Raya, and Mara. I don't care if you're tired of hearing about it. These are the stocks that are making money. And these are the stocks that I need you to start understanding the ranges of. See that negative correlation there between Solana and the rest of Bitcoin and Ripple and Ether? So Hut 8 and XPDI bullish, making a white paper on XPDI. And then you'll likely be seeing this in next year's EB1 All Stock. By the way, guys, I have the ever bullish one All Stock portfolio built. I'm frankly a little bit surprised that no one, there have been very few pre-orders of it, but I also get it. It's Christmas. You're not thinking about tossing the Sherpa a bone. But once we go over these results, you're going to understand what the fuck is going on. So, hypothesis, the market digested higher CPI numbers. That was from last week. This is same. We have no big surprise, same. Given my thoughts on inflation, let's just make this easy. It's too easy right now. The market has no choice but to run up. But it's same, but it's different. Same, but different. That joke was a lot of work and very little payoff here. I'm trading X oil for the rest of this week and next week. I'm not going to touch any oil stocks. I got burned. It's not an emotional thing. It's a pragmatic decision. Right now, the market is moving so contrary in the price of commodities and the banks. It makes no sense at all. And you'll see down here why in a second. But it makes no sense that commodities would go down over 12%, which they did in less than a week, which they did when we brought out inflation numbers like we brought out. We all know they're manipulated through the Saudis and all of the other pieces of the OPEC oil cartel. But I'm just out on that for a hot second. But I think that this is beautiful. It's going to be beautiful because as we move into next year, we're getting a pullback in prices so that we can enter right when we buy our portfolios. And there are 4 oil names in the Ever Bullish 1 portfolio, Ever Bullish All Stock portfolio 22 this year. Again, so go buy it. And then the market will correct this sell-off. I'm very, very bullish in the pullback being and providing prices next year for the Ever Bullish 1. And I do have 3 new, and there's actually 4 if you include an ETF. The The game plan is simple and it's abbreviated, like I said. So the game plan is a very simple and obvious trade that's right in front of it. I'm all in on LABU for the rest of the next 2 weeks. It is more than a decision on gut. It is a decision that, based on what we've seen here, based on when 401k contributions are going to hit the market, based on the lack of breadth in the market, and based on the overall valuations, I believe that they're not only are they the best sector as far as value, they're the best sector as far as growth, which we all know. They're going to rally into tech, and they're not getting a lot of attention right now, which provide us that $49 to $50 price to enter. And I still don't even think I was early when I bought the 60s. So that's what it is. You got to be convicted in what you're doing. ASO is Academy Sports and Outdoors. If you're looking for something different, if you're not convinced, consider ASO, GXO, Hot Riot Mara, SoFi back on till the end of the year, just like I mentioned in the last one. Inflation is transitory. Remember that. And then I'm going to talk a little bit about the banks. So we had rates go up. We had tech earnings beat. We've got Thanksgiving around the corner. We've known that the inflation numbers were going to be high, and the Fed has actually already somewhat predated what is going to happen or anteceded what was going to happen by making the discussion of taper on rates. The market's going to get choppy after the first of the year, but I think it's going to run up from here. So I just like banks. FAS went on a tear. When I first recommended that back in August, FAS was at 100. It went up to 150. We made 50% in 6 months in it. It's now retraced down into 130 range. While all these good things are happening for banks, very similar to the oil hypothesis, I don't see how this doesn't make money. SoFi and Lending Club, SOXL still bullish. I told you about that one last week. I know everybody cashed last week on that one, so you're welcome. AMD is beautiful. AMD is better than NVIDIA. You're welcome. Best bet is LabU. Here's a little bit more. So I know I've already done the video on how moving averages work, and we see the moving averages here. I know we've done the video on MACD and how MACD works, and we see the MACD here. MACD hasn't been as low as it is since the last time it ran up from 50 to damn near 60, right? Time before that, it was where it is. Actually, even the last time it popped, it was not where it is. And then the time before that, it is basically a little bit deeper than it is now. And then we have the RSI. When we look at the RSI, we're right where we are. But what are we not doing? This is some shit the Sherpa invented here. And I didn't invent it. It's literally just counting. But something that happens is how many down days in a row? 1, 2, 3, 4, 5, 6, 7, 8. Then we had a hammer, inverted hammer, whatever you dipshits want to call that, that are into the candle sticking. And then we tested above 52. We tested above 52 again. And then yesterday, on a trade short and those Fridays that don't mean anything, we fell in love with the stripper a little bit. It went all the way down. It opened up at 2 points up. It went down 200 points up, went down 200 points, and then it basically finished flat, down 1%. Make it an easy trade, guys. It's that easy. So review the chart above. Y'all know I love to share the wealth, so go get that. Don't forget to help a brother out. Subscribe to my Substack, which we are. Don't forget Lithium Americas. Don't forget Palantir. And then most importantly, ASO. So look at what I put up here, guys. Premium portfolio results. I've made 113 videos on YouTube from the first of the year to now. We only made 3 trades in this portfolio. We got all the way out of the market once. That's 3 emails that you have to get to basically follow some pretty easy instructions for the type of outperformance, for the performance that I provided. So if you had $1 million in the Ever Bullish All Stock portfolio, you would have made $660,000, almost more than two-thirds of $1 million for $100. That's why I created this company. My goal is to sell portfolios that beat the market. That's all I've done since I started this. That's all I did since before I started this. I just wasn't selling them. I just can't imagine why anybody doesn't want to go out and scoop these motherfuckers up. So go do it. Help me out. Help yourself out. Another big note here. Ever Bullish Balanced, 21.5% in a balanced allocation. If you look through this, go look at the beta of that portfolio. It's less than 6.6. So for 60% of the risk of the market, which is the same thing as a balanced allocation that your advisor is going to put you into, I beat the index by 9%. Same $1 million, I just made you $90,000 more than the advisor who's charging you 10,000 or 1% of a portfolio. And I told you it was easy, and I told you how I did it along the way. So thank you for riding with me. And then go buy one of my portfolios or all three. And here we are. What do you think it's going to be? What do I do? Real simple. This is LABU. Pull up the December 17s on LABU, and then look at the every single strike price between 1 and 60. I put 2 and 55 here because I want you guys to be riper than I am. So go buy those options if you have any convictions in what has made all of us a lot of money throughout the year. And finally, everybody, spend time with your family. Say what you're grateful for. Love all you guys. I'm grateful for the community of bulls that we've created throughout this year. And I am bullish on devouring the market next year too. So go buy one of my portfolios. Just tell a friend, tell a stranger, tell a neighbor. Download the Ever Bullish podcast, Ever Bullish 1 podcast on all podcatchers. Follow my Instagram for all the trading tips that I'm giving you here. And most importantly, go subscribe to my Substack. A man with a dream trying to get 1,000 on Substack for the best content that involves trading and the most expertise on the fucking internet. So I love you guys. AFG, LFG, LGR. Let's get rich.